What's up, guys? So today, very excited. I finally got my audio and video fixed. Audio from yesterday was amazing because I got it fixed, and video today, we've got the background removed. Okay, so without further ado, the video. Today we're talking about where's the S&P 500 after yesterday. Jerome Powell had gave his testimony. It says, what do you do? The Semiannual Monetary Policy Report to the Congress. So that happened yesterday. I watched the whole thing. And I briefly mentioned this yesterday. Well, what does that mean, Jordan? Or I briefly mentioned my little take on the meeting, and basically that's all I've got for you today too. The one big thing that Mr. Jerome Powell said yesterday was, well, I believe the terminal rate for the federal funds rate will be higher than previously anticipated. So what that means, that's kind of a shock to the market, and we're seeing a shift in what the market believes is going to happen with the federal funds rate. If you don't know this about the federal funds rate and what the Fed does with the overnight interest rates for the banks, that has probably the largest impact on the S&P 500 and stocks in general. If you have a near zero federal funds rate, then the stock market will run up because you could basically just go borrow money for nothing and return something on that. And why wouldn't you? So when there is an overnight federal funds rate that is higher than zero, that affects the rate in which banks charge to loan clients. So the interest rates that you and I will get depend upon the overnight rate, which is set by the federal funds to lend to the banks. So now, over the last 10 to 15 years, we've had a close to zero federal funds rate, and now we are raising it, and Jerome is saying we're going to hold. That is a negative thing for the stock market. So now we're going to look at the chart, S&P 500. Where are we going? So what I have here, I've pulled up is the daily. Now, on the daily, the stochastic. I'm not a incredible stock predictor, but these basically patterns and the tools we use are incredible stock predictors. So we're going to look at the stochastic. We can see we have crossed, the green has crossed the red. I like to use the 10 period aggregate. I'm using Webull. I love Webull for charts, and I think it comes as the 14, and I like to change my lines to green and red because then it's like, you know, the fast one's the green one and the red one is the slow one. So the green crossed over the red. That is a bearish thing for the S&P 500. This is SPY. This is what most people are familiar with. Trading the S&P 500 is SPY. It's an ETF based upon the S&P 500, which is ticker SPX. Okay, so looking bearish after the meeting yesterday. You have big volume. People are like, okay, we're going to trade, we're going to sell because of what was said at the Semiannual Monetary Policy meeting to the Congress. So big red bar, big red price action. And it looks like now these lines here, these are moving averages. Okay, it's a 200-day moving average. This is a 50-day, and this is a 10-day. And up here it says MA10, MA52. Okay, yeah, cool. So it lines up. So when you're 10, the green crosses the yellow. That is typically a bearish thing to happen. When they start to cross the red, that's also very bearish. An interesting thing I like to point out here is on the weekly so far. Now, this is something I want to mention where plug for Game of Trades. I love this guy. Watch him. You'll get really good information on where the stock market is going. I'm kind of a meta-analysis of what's going on with the information, so hopefully it's quicker and less details. But he pointed out what I just showed you is the 50 crossed the 200. Let's go back to my chart. So yeah, you see that. So the 10 crossed the 50, and this is the day. This is the weekly. Okay, so that is a bullish thing for the stock market. Now, with all the macro information, I don't see how that is bullish. But I mean, yes, technically on the technical analysis, that is a bullish thing. This cross, we're looking at this green right here crossing this yellow. You could see after that happened, the next day you had a green day. The next day, Jerome Powell spoke and we had a red day. And on the stochastic, and we're still looking at the weekly, we're still going down on the stochastic. If you're using stocks as your trading vehicle, I don't recommend it. I've done this for almost 3 years now. I was not profitable with stocks. I advocate for selling lottery tickets, and that's selling option spreads because it gives you such a huge margin for error. If you buy options, people say, oh, it's risky, don't do that. And that is true, don't do that. Don't buy options because it's always working against you and statistically you're gonna lose, unfortunately. But on the flip side of that, when you sell options, it puts the odds in your favor. So that is how I like to trade. But 90%, probably 99% of people out there are trading stocks. So I'm gonna give you my take on where I think the S&P 500 is going and how I would trade that if I was trading stocks. This is not financial advice. I was not profitable with stocks. I'm profitable selling lottery tickets. So if you had to trade stocks, what I would say is look at this weekly chart, look at the stochastic, put the time aggregate to 10, and you're gonna look when it crosses. So we can see right here, you had a cross on this day, on this week. So you're swing trading, you're looking at the weekly, all right? So 10-14, that week, you had a low and you had a cross. So from here to here, you would have taken a nice profit. So what's that? 359 to 401. 359 to 401. I just did the math on that for you. I just did 401 divided by 359. So had you entered in this week in about the mid-range and sold at the top here, we'll see it didn't even cross over yet, but you could maybe see that it's about to cross over. Say you sold near the top here at the crossover. So 401 divided by 359 would have been, excuse me, almost an 11.7% return from here to here. So they say the S&P 500 returns 10% a year. Bam. And that one little swing trade, how many months was that? That was from 10, 14 to 12. So less than 2 months, you did what it took an entire year for the S&P 500 to do if you had followed the stochastic from here to here. Let's check another one. Let's see, well, does this really work, Jordan? You had a cross right here, a cross from bullish here. So you would have entered, say, 380. You would have exited, say, 419. Let's do our math again. There we go. And that would have been a 10% return from 380 to 418. Bam. So you can see this works if you're swinging. Again, I don't advocate for this because I was not profitable doing this, but I'm just showing you these crosses on the stochastic. Let's see another one here. Had you entered here, exited, bam, here on this. Again, we're looking at this stochastic right here. We're looking for the green to cross over, which would have happened on this week right there, somewhere between this week. So the mid price 440-ish, and you would have entered somewhere around 415-ish. You would have been profitable from here to here. So this does work swing trading. It, in theory, again, practically it did not work for me. I'm just showing you because I know most people trade stocks. So here, when we had that big COVID dip, look, you'd have seen the cross right here. Bam. You would have rode it all the way up to here. Bam. What's that? 296 from 215, 220. Big profit. So that you're trading, you know, every couple months, you're waiting for the crossover. So let's apply that to right now. Okay. So right now you just had a speech. Okay, we don't have a crossover. So the only thing you can control in the stock market is your entry. Of course, you can control your exit, but in order to have a good trade, the first and foremost is your entry. Right now is not an entry time. Just look at the stochastic, it's not. So regardless of what you think about the macro situation, what I like to say is I drink the Kool-Aid also. If it's gonna go, even no matter how terrible this macro environment is, if I see things that says, hey, it's going up, guess what? We're gonna drink the Kool-Aid and go up with it for a little bit. So I think that right now, the macro situation, I'd say we're going down. If you want to enter, you want to go long or short the market, wait for a cross. If you wanted to short, you probably could have shorted it right here, which would have been, bam, at about 409. So, and you'd wait until we have a cross. So from 409 till the next cross, it's probably going to be profitable. We're looking at the weekly, we're looking at the stochastic on the 10-time aggregate. Okay, so let's look at the daily. Let's see what else we got going on. I drew these orange lines. Now, Technically, for technical analysis, these two lines to me are very important, 375 and 427. We are almost dead center, okay? Because you have strong support right here and you have strong resistance right here. You have this big top. We failed, so it's a lower high. We failed to cross this, and this would be the next big support. So that was the resistance. We failed to cross the resistance. This would be the next support that you'd want to see break if you're a bear. It looks like we're staying in this white line, this diagonal line. It looks like we're staying inside of this channel. These two purple lines is another channel. That's where kind of the bear market started, and we stayed inside of the channel, and then we broke it here, and then you had that cross on the weekly right here. So it kind of looks bullish, except we're getting new bearish information. So you have technical and macro kind of contradiction. So what is there to say about this? On the daily, it just crossed over on the stochastic right here. So I do believe we are going down, especially after what Jerome Powell said yesterday. So I want to also show you a situation if you were to trade the lottery tickets. I'm going to be like, oh, this is how much you can return. Okay, I have pulled up a trade for you guys. Let's look at the chart first, and boom. So I made these two pink lines. You should notice they have been added. What I've done here is a short-term level of support is 387. A short-term level of resistance is 407. So the better thing to do, and I wouldn't do this because we're in the middle of the road. I think there's much better things to do with just kind of stocks that are overbought or oversold. But this video is about the S&P 500. If I had to trade the S&P 500 or SPY today, this is what I would be looking at. We're dead center, middle of the road of this resistance and support. Here, boom. This trade right here is going to pay you $97. This is a lottery ticket, right? Again, if you want to learn how to do this, check below in the video description for the school that I'm working on. It's in a beta. You get a huge discount up until the course is completed. So check that out. Here, this is a lottery ticket you are selling. It's a 385 put spread, and you are selling it for right now $97, now $96. So this is live. This is before 4 p.m. It's before market close. So I'm just going to use kind of averages. So pretend we sell for $100 and our buying power is $400 because we can't lose more than $400 on this trade because that would be paying the gambler if it goes wrong. If you're bullish, you sell this spread. It's going to lock up $400 in buying power. It's going to pay you $100 in buying power. Now it's 95. That's about a 25% return in 16 days. Expiration is March 24th. So let's go back to our chart. As long as we stay, where's March 24th? Right here. I should throw a line right there. Let's do that. As long as we stay above 385, notice I said 387 and it was at 385. It's because it gives us a little bit of margin for error. It gives us till down here instead of right at the line. But this is your fight zone. This is support. So the price action will fight here. That's why I picked that number. If we stay above 385 right here by this line, that is a 25% return. You can go much safer than that. You can go more aggressive than that. If you're bearish, and I had to do something today, let's look at the 407. So let's go back to our little tool here. Boom. Then we're going to switch to, we're going to short the call, boom, and then go. So what I say, 407, I believe. So we're going to go 407, boom, boom, boom. We'll go, let's just go 410. 410, close enough, 415, boom, boom. Ow. Okay, here we go. About the same. We could move it in a little bit and probably get about the same deal. $100 to 400. Like I'll just show you 407 to 5. Yes, 407. Boom, right there. Look, okay, so it's a little bit richer. We also went in a little bit closer. Anyways, 116 and our max loss is 384. That's what we would pay the gambler if we are wrong. And we actually have a chance of that happening. We have a 73% chance of being profitable on this sold lottery ticket. We see that number. Okay, cool. It's still in here. We see that number right there. If we set a take profit order at a 50% buyback of our lottery ticket, we have about almost an 80% chance of that happening. So that is what I would rather do than try and trade the stock market, because stocks, when you buy a stock, you are at neutral. If it goes down, you lose money. If it goes up, you make money. When you buy an option, you start out in the red. You're already losing money when you buy an option. When you sell an option, you start out in the green. You're already green. Do you see the advantage and disadvantage? So you have to be really right when you are trying to look around this camera. When you are buying stocks, you have to be really right, and it doesn't pay very much, and you'll lose a lot when you're wrong. When you buy options, you have to also be very, very right. Now, you do get paid a lot when you buy options, but you have to be very right for it to work. When you sell options, you get paid a lot, and you don't have to be very right. You just have to say, hey, we're just going to stay above, we said 385, just have to stay above 385, and I think we did pick 407. We have to stay below this line if you're bearish. We have to stay above this line if we're bullish. Buy this line. We can also do all kinds of things. We can move the time out. We could say, let's see, time at time. So you can see it's going to pay more if we're moving time out, because that's a lot of time for it to stay in that area. So now, say 215 on, what's our buying power? 284. Let's look at that. So 215 divided by 285. Bam. So that is a 70, that's a real number. That is 75%. It's a 75% return. So you can see it pays a lot more to do something like this as opposed to using stocks as your trading vehicle. Again, if you want to learn about it, check the video description down below for the course that I'm working on, deeply discounted right now. Once you buy it, you get to keep it for a lifetime and for that great discount. So guys, I'll pull the chart up one more time. I think I'm done. Is there any last words on this? Right now, I am bearish. Not financial advice, but that is just my opinion. Could be completely wrong. It could run up. So that is pretty much it. So guys, I want to thank you all so much for watching, and I will see you guys in the next video.